Morning, everybody. Welcome back to the Opportunistic Trader. On December 12th, we're now joined by Tracy Shuchart, independent trader up north of the border in Canada. She's been helping us recently talking about technical analysis across all asset classes, giving a lot of great information. How's it going today, Tracy?
Good. How are you guys?
Good, good. Got a lot going on as per usual the past month or two. A lot going on. All asset classes moving. What are you looking at right now?
Right. So for for S&P, you can see we're kind of already breaking down already. So bigger picture, I'm actually looking for a move down into this 2450 area, believe it or not.
2450. Okay.
2450 area. I mean, not straight down, but that's kind of the area that I'm watching on this cycle. Because we're going to be coming into a cycle low um, over the next couple of days. So I'm kind of looking for a move down into 2450 area, at quote unquote Christmas tree rally or Santa rally, whatever, back up to 2600, and then a sell off even further into next year.
So you're talking about this 2450-ish level in the next
before
week or two
Christmas.
before Christmas. Wow. Okay,
Yeah.
so that's about a 5% move from here. And just wondering, so take us through the technical side. What makes you pick that level opposed to 2505 or 2300?
Well, I mean, I have 2574 is my next level down. If you can see, if you come over to last year, we sort of consolidated in this area. So that would be, the market would probably tend to kind of, latch on to this area. We traded there for a while. So, the market could bounce there. Ultimately, that's my like do or die line, right? So ultimately, if this area fails, this area right here, over here starts to fail, then, I'm going to be looking down to the next HBN that we traded in, next big HBN was down here at 24.25, but we do have a support around 24.55 and another HBN in that area. So I'm looking for a failure of this area, this 25.74. Then I'm looking for a support here, and then a rally back probably to 2600 where we broke, and then again sell off into next year.
So two questions. One is, let's assume we get to this 2575 level, which was very close to the lows earlier in the year, and then we don't follow through. Is it the sort of thing where, like, when, as a trade progresses, is it over a few hours, a few days? Like, when we're looking for a follow through, like, how will we know if it's actually breaking through or if it's rejecting that level and bouncing back up?
I mean, the markets are so volatile right now. It's not like, we're moving, 50 handles a day easy.
Absolutely.
Right. So, I mean, you're going to know if this area is, going to hold or not. I mean, I would be looking for, ultimately the test, for me would be if this area holds, then we would see a bounce back up to, 2600 level or, somewhere around there. So that, I mean, I think you would kind of know right away if this area is holding or not, in other words.
Okay. Now, what about the formation that we're putting in the S&P over the past 2 months, where we've gone down to 2600, then back up to 2800, then back down to 2600, back up? It's almost like a triple top, triple bottom. What does that formation typically do out of that formation?
I mean, it's a triple top or a triple bottom, but we're breaking that triple bottom. To me, this is we don't really have quadruple tops or quadruple bottoms, right? One side's going to break. And, my bias is to the downside. So, I think, at this point, we're already seeing this is, almost, a quadruple.
What about if we do start to trade back up to this, like, let's call it even 2650 level, which is where we just were yesterday, and even the high of the day. What would it take to get you bullish? What would it take to kind of get you off of, wow, it looks like this triple bottom held, and the trade is actually higher, squeezing people out? What would you have to say?
well, we have this triangle here, so I would look for a move over this triangle right here, because it could slip back into the triangle and then come back down, or it could hit this trend line and come down. So I would need a move over, say, 2,700 to get bullish.
Okay, perfect. Now moving on to the energy market. Crude oil right now is trading 51.80. What's your technical bias there, and what's the information telling you?
I'll get a different longer term chart over here. So really, really what I think that we are kind of doing right now is, if you'll see, back in 2016 in December, when they made that decision, we kind of had to move up, and then they stabilized prices, right? And we sort of consolidated in this area for about 3 months. Now, I don't think that, we're necessarily going to do that, but given the seasonality of December, that it tends to be a little bit more bullish. Obviously, equities are going to weigh on this if, this starts crashing. But, technically, seasonality suggests that, December is kind of an uptick month. So I'm kind of actually looking for this area to hold, just like here, probably for the month of December, and then sell off again, kind of like we did after cuts in 2016, kind of sell off again in the new year, which is also fits with seasonality. January and February tends to be very weak months.
Yeah. Oh, that's a great looking longer term chart there. And so it looks like support is probably closer to the lower 40 level, like somewhere between 40 and 45 in that
Yeah,
kind of region.
yeah, I think down here, I think, ultimately, we're headed here, possibly lower. We have to see how things go. But I think into the new year, definitely we could see those 40s. But for the time being, again, I think, December might be kind of, you know, it, just a range trade for crude.
Well, similar, what would it take you to get bullish? What indicators, what sort of price action
I
you
would
need to
be,
see?
I need over 57 to remotely get bullish this. And then again, if this support starts breaking, we had a low of 49.28. If that area starts breaking, I would look for this 47-ish area. I don't think we'll make it to 42 this year. I think that's probably in the cards for next year.
When you take a look at some of the data, because I know that you're really on top of the energy markets, when you take a look at some of the data, the storage data, demand information, do you get the sense that the price here is the fundamental support the price here, or that we should be higher?
I think that's, well, fundamentally, it's kind of a weak market. We're a little bit oversupplied right now. But, it is also a speculative market. So, did it warrant a, $26 sell-off? I don't, I think that's a little bit rash, but, the long side of it, we were so over long the market that, we're subject to, when they start liquidating, these massive sort of moves. Right now, we did see another reason, I forgot to add, another reason that I think that we're kind of in this consolidation zone right now is because we had another long liquidation last week in the COT report, and this market didn't tank. So, I think we're kind of seeing, the last of the longs. Every week we've been seeing this huge long liquidation. The market kept taking. Last week was kind of the first week where, the market didn't take, even though we still had, long liquidation. So that kind of makes me think that that market is kind of stabilizing here in this area, at least for the interim.
Yeah. Just a market update here. S&P has taken out the overnight lows, and we're trading oh 07. The new low is 06 and a quarter, so we're down over 1%. Nasdaq continues to outperform. It's only down about 0.4%. Russell's down 1%. Volatility is making a new high. We're at 24.79 right now, which is the high of the day. So that's just a market update on the equity side here. What about the dollar? With all the talk with the Fed.
I was just going to bring a dollar chart
There you
Start
go. I'm moving across your 4 or 5 markets that
right,
you monitor very closely, and obviously the
right,
dollar coincides closely with what's going on with fixed income, with the Fed.
right.
I'm interested. We're getting on the 19th is the next FOMC meeting, expected to be a hike, but then from there, a lot of differing opinions. So, what does it look
So
like technically?
I'm very bullish the dollar. I've been bullish the dollar this whole year. So it's kind of no surprise. But technically speaking, we've got a symmetrical triangle. We haven't broke it yet. So my next, I'm looking for this to make a move up to 99 area. Um, you know, if the Fed hikes and things like that. But I mean, besides all the fundamental reasons to be, long the dollar or strong the dollar, technically speaking, this is a very
So
bullish
technically
chart
speaking, it
pattern.
looks like it's a bit of a coil right here in the flag pattern, and then typically from that you look for a breakout higher, is what you're saying.
Correct. So, I mean, how you could play this if you were trading the dollar is you could wait for this to make a move up, retest, and then on up. I mean, that's generally how you would play a triangle, or you would wait for a solid break, retest of the triangle, and then take the short.
It's interesting because I've seen a lot of bank research and analysis, looking forward to 2019. And a lot of people, first off, were caught off guard this year by some of the dollar strength, but are also looking for next year for dollar weakness, saying that the
Right.
Fed is
Again.
done, that, the Fed is, if anything, potentially even going to cut rates next year, but just the relative people were pricing in 2, 3 hikes. Now we're down to less than a hike for next year. And so that's the reason for the dollar weakness, which actually
Right.
probably plays in better for your long dollar bias. The fact that you got people starting to lean towards the bearish side despite the strong
Right.
price action.
Right. I mean, you also have to look at, things like the euro dollar market and things like that. I mean, there's still, tightness. There's still tightness. I think there'll still continue to be tightness in the dollars. So again, I'm bullish, even though everybody's bearish.
When you express your view in the dollar, do you trade the euro or the dollar index or the yen? What's your preferred?
I trade either your 6 EF, so Euro futures, or CAD futures. And CAD's another one. I don't have a chart right now, but given all the fundamentals, this thing with China, as well as oil and things like that, I think CAD is a sell longer term. I think we could hit. I think CAD's trading now about CAD futures are tanking as
CAD
we
is
speak.
dollar CAD is trading near the high of the year, one at
Right.
33.75. The
Well,
CAD
futures
futures,
are the opposite. So,
right?
like, I trade 6C, so really it's CAD USD. So right now we're trading about 74, 79. I'm actually looking for that over the long term to go to 70. So I expect still a stronger move. We keep that 75 area keeps getting rejected. And I think you could play that as a short pretty much against any major currency at this point. I think it's all across all currencies. I think it's the weakest one.
So how does that affect you as a local up there?
So, well, I trade in USD, so.
I'm not talking about trading. I'm just talking about in
Oh,
general living
I
life.
mean, I don't think, just like anything, I mean, I don't think I haven't really seen an increase in, prices or anything like that because of the weakness. Not yet, anyway.
Right.
I mean, I don't see, like, rents and food and things like that so far really haven't been, really affected.
Gotcha. What else? Anything else catching your eye in the global markets right now?
So, I mean, I think gold's at an interesting spot. I know it's this thing, but you go to the gold. I mean, it's pretty bullish considering the strength of the dollar right now. We're still up at upper 96, 97, right? And gold's trading at what 1251 right now. So technically we had this broadening wedge pattern. We came back, retested it. I mean, you can't get a better technical trade than this. this is a very bullish pattern down here. We broke out, hit resistance, came back down, retested. So this would have been your long. I mean, that technically was a beautiful move. I think that, I would look for this like 1279, 1280 LBN right here for signs of rejection. If not, I think we could be headed back up to 1300 area, in which case I think it would be a massive sell.
So it's actually interesting. So you're looking for higher price action in gold, but also higher price action in the dollar, which typically doesn't happen together.
Correct. But I think, and I've said before that, I think that, some of these correlations are going to start to break down.
Absolutely.
And that at some point we're going to see gold and the dollar moving higher together. And, kind of that's the case. I mean, the dollar's still super strong. I mean, super strong, and we're up $50.
That's the true sign of a technician when you get some of those indicators that oftentimes don't don't move together, but you look for those sort of signals that it's what the chart's telling you, regardless of the correlation.
Right.
So that'll be interesting to keep a close eye on there. So you're looking for gold higher and dollar higher. So
and dollar higher. I know it's contrary to what people.
So to sum up the webinar, we've gotten a lot of great information here. We've got gold higher, dollar higher, and before Christmas, a significant, probably, I just want about a 5% drop in the S&P, and then possibly a rally back from that point. So we'll definitely keep an eye on things. A lot of good stuff Tracy's given us to keep an eye on. Any other thoughts or comments before we wrap up?
That's it for today.
That's some good stuff. I like it. We're going to type that up, and some great looks at the chart. I really appreciate you taking the time to show us what you're looking at, and we'll be back to you and keep an eye on those levels that you're talking about.
Okay, great. Thanks.
Thanks.